Gap and crap, that's what they call it, but still sitting above major support. This is technical analysis of the stock market's update and forecast for Wednesday, July 22nd, 2020. Hello traders, I'm Richard Graham. We're going to start by taking a look at the S&P 500, the SPX index. This is the 4-hour chart where each bar represents 4 hours of trading. And we finally did it. Monday, we finally broke through this major area of resistance. Remember, we had this island reversal pattern that happened right around the 8th and 9th and 10th of June, where we sold off, gapped down, sold off really hard, and we weren't able to get above that area until Monday. We finally got above that area, and now we can really run. We have pulled back a little bit. So today, if we get into the 5-minute chart, we can really see what happened. Here's Monday, when we finally broke through this major area right around 32.35. We went on a bull run all day long, and then today we gapped up and we consolidated in this area and then sold off all the way down to this area here. So we did fill the gap, and that's good news. We are sitting on some pretty good support. These are the moving averages that are sloping up. If we go out to the 1-hour chart, we can get a better picture of that. We're still sitting above both major moving averages, the 200 and the 50. They're both sloping up. If we go out to the daily chart, same thing. We've got, the 200-day moving average is slightly sloping up, and the 50-day moving average is sloping up as well. So those are going to act as support. We also have major support in many areas. First of all, if we go all the way back to this area here where we had this upward sloping channel in red, we hit the bottom of it here on the 2nd of April. We hit it again on the 14th of May. Then we hit and bounced again on the 15th of June. Now we did break down below it here on the 26th of June, and we've been bouncing around trying to get back into that upward sloping channel, and we did it right here yesterday, or actually on Monday. We actually broke through it, and so we were back in that channel, barely. Now we've also had this upward sloping trend channel in yellow that isn't quite as pronounced, but we did break through the top of that channel as well. So we do have support on this red line, and we have support on this upward sloping yellow line as well. And we have support here at the orange line, which is horizontal support right around 32.35. So the next area of major support is right around 31.80 or so, and followed by 31.30 or so. And then we have support down here at around 3100. So that's if we go down. Now if we go up, we're going to have to go back a ways, all the way back to the 21st of February, and that's where we had that gap down, the big sell-off, the big 5-wave move to the downside that lasted for about a month from February 20th or so all the way down to March 23rd, where we lost about a third of the stock market's value. Now, if we can get above this area where we're sitting right now at about 32.57, we don't have a lot in the way. We should be able to go all the way up to 33.35 or so, and that would close that gap. That would probably be the next area of major resistance. So I'm bullish at this point, and why wouldn't you be? The trend is your friend until it's not. We've been in this upward sloping channel, and we're back in it, and now we don't have a lot of resistance until we go back to February 21st. So things are looking good on the stock market. The trend is your friend until it's not. We can go into the Qs. They had a sell-off today, and a lot of people are looking at this and saying, hey, we have a double top here. We did have quite a big sell-off in the Nasdaq stocks today. Microsoft down 1.5%, Apple same, Facebook same, Google down 0.5%, Amazon down 1.83%. But you got to keep in mind that the trend is still your friend in the Nasdaq, and we're still having higher highs and higher lows on the longer time frame, and we're still sitting above this major area of support right here. So If we go over to the Dow Jones Industrial Average, not doing quite as well as the Nasdaq, but still in this upward sloping channel. If we go over to the Russell 2000, the IWM, same kind of picture. We're in this area of higher highs and higher lows, and we just broke out of this major area of resistance right here on the 1 hour chart. That could take us all the way up to these highs we saw at the island reversal around June 8th or so. Now, the Russell 2000 is definitely not doing as well as the other indexes. We've got a long way to go until we get to this area right here, which is where the S&P 500 is sitting. And we'd have a long way to go before we even broke through that area, which is where the Nasdaq is sitting right now. You see, this is where we started the sell-off, and now the Nasdaq has really taken off to the upside. If you look at the major cap-weighted stocks, Apple, look at this chart from March, the sell-off. We recovered it all and probably about doubled the recovery. Amazon, same thing. We had the sell-off here, and look at that, just taking off to the upside. Microsoft, same thing. Google, here's the sell-off, and we're sitting above that area, so that's looking bullish. Facebook, same thing. Here's the sell-off. Here's the major area we needed to get through. We did it. We broke through it, and we're sitting above it. So all the major stocks, including Tesla, which really isn't a major cap-weighted stock at this point, but look at this move here. From about the 29th of June, we've gone from 973 all the way up to a high of about 1,800, and then we had this sell-off. Now, we had this bullish pennant or bullish flag. We just broken out of it on Monday, and now we're retracing somewhat and sitting at this area of support right here. Looking really good on Tesla at this point. Trend is your friend until it reverses. Bonds are also on an uptrend at this point. Remember, we had the big sell-off in the market, and bonds went crazy to the upside and to the downside, and we created this triangle that we got into. Well, we broke out of that triangle right around the end of June, and we've been starting this new channel to the upside. Right now, we're starting somewhat of a new triangle pattern, and I would expect at this point to see a continuation of that. This measured move should take us up to the top of this channel at right around 172. This is TLT. This is the long-term government bond. Now, Europe just came out and announced a big stimulus plan, and that has really helped with a lot of these risk assets, because we expect that the more money that governments pump into the economy and the more that they print, the higher asset values will go. Now, especially gold and silver. And this is what happened. Last week I talked about breaking out of this consolidation pattern, and sure enough, we did that. Today we had quite a move in gold, and the move was even bigger in silver. We had a 6% move gapping up from 18.5 all the way up to 19.5 on the SLV, the ETF fund for silver, and then going all the way up to around 1987 before retracing. But what a great move we've had in silver as well as gold. Silver is now outperforming gold. Here's the gold-silver ratio, and we see that silver has been outperforming gold on this chart ever since March 18th. But if you go back far enough, gold actually was outperforming silver from the summer of 2016 all the way up until that time. So for the last 3 or 4 months or so, silver has been outperforming gold. Here's the VIX. This is the fear index. We have been selling off, which is good news. We're still sitting at 25, so the fear is a little bit elevated than it normally is in a bull market. Normally in a bull market, we'll see the VIX around 10, 12, maybe even 14. So we are sitting in an elevated situation right now. However, the VIX is sold off quite hard. What I like to do is look at the VIX term structure, and these are the prices of the futures. Right now we're in contango, where we have 12.66% difference between the first month VIX futures contract and the second month VIX futures contract, 24.72 versus 27.85, and that basically means that it's good for the stock market. It's a bullish sign when the VIX futures are in contango. Okay, traders, thanks so much for watching. If you like these kind of videos, do me a favor and hit the like button, the thumbs up. I really appreciate it. And if you haven't subscribed, consider doing that. That way you'll get a notification every time I release one of these videos. So good luck today, traders, and we'll see you next time.